So this market continues to be incredibly wild, and we traded this today on 1 micro on the 50K minus 860. We had some issues with NightTrader. It traded 3 times and got out of sync with automation in the middle of the night and underperformed the hypotheticals of minus 670. We also increased to 6 micros intraday on the 200K portfolio and down 24.75 on the day, down 12.05 on the week, down 370 on the week on the 50K with the hypotheticals, 270 per micro. So that NightTrader error put us about $100 behind the hypotheticals on the 50K, and the averaging in on a drawdown on 6 micros, we're a little bit ahead, down about 200 per micro on the week. And we are about $1,000 per micro away from a worst case drawdown. Let's look at the portfolio calculator. We'll go over how wild this market was today, the news flow and the trades on the day. Let's look at, after today, we're at about $1,700 drawdown, and that is right in here, a very frequent number. And our worst case drawdown is right in here, about $2,700. So about $1,000 away from worst case drawdown per micro. We're trading 6 micros on the 200K and 1 micro on the 50K. So let's take a look at the price action in the NASDAQ. And there continues to be a force that just continues to prop this market up. I thought that once we closed down 20%, the dip buyers would cut back a little bit, and the market started to sell off, an accelerating type sell-off last night towards those lows that we saw right here on February the 24th. And then it popped, massive popping all day, propping and popping, I guess you could say was the theme today. Huge counter trend moves. You see about I think a 12-point, makes it new 12-point low right here, and then jumps about 4,000 per contract. Then makes about a 6-point low and jumps about 11,000 per contract, only to roll over again. And so there continues to be a massive, highly liquid force that tries to keep this market from going down. And the Fed, Treasury, and whoever their Wall Street partners are continue to prop this market up. This is the slowest, most methodical bear market I've ever seen. Usually bear markets are fast. This one is a choppy, slow downtrend, and so it has been more challenging to trade. Yesterday we had a nice trend day, and we closed down 20%, and then just chopped like crazy today. And let's look at the trades on the day. So here is a 7 micro setup. You can see adaptive moving average was the highlight of the day. It was highlight yesterday. It's really performing well. Nice short trade here. Nice reversals here. And this continues to be one of the top strategies in this market, calling longs and shorts. Cobra 3 down on the day. Market pop. Looked like it would go higher. They said that Ukraine came out and said they're not going to request to be a part of NATO. And the market rallied on that. I thought that was unusual. I guess the market saw it as the war coming to an end, maybe. I don't know what the market was thinking. It was looking for an excuse to rally. The market thinks continues to think there's so much liquidity that this market continues to think this is a bull market and this is an oversold condition, and it's just time to rally the wagons and create these bull market rallies and create a V bottom once again. But the market just rolled over. Esther counter trend got short here, stopped out, just massive ranges, over 100-point ranges in the S&P. NightTrader took 3 trades last night, and we got out of sync. We got stopped out and re-entered on this one by the signal, and it got out of sync and it had an extra contract and exited this position in the middle of the night and turned off automation. It looked like a market that was going to tank in the middle of the night, but that force came in and propped the market up as it has been doing. No matter how much it props it up, it continues. There's a lot of selling in this market still that bring it down, and that's why there's so much volatility. The force that wants the market to continue higher and then all the sellers that keep coming into the market, because in reality this sell-off is not about the war yet. This sell-off has more to do with interest rates and inflation. So let's look at the NASDAQ strategies on the day. EVP1 was a highlight at the end of the day. Gap continuation. Market has used our gap continuation shorts as a buy signal lately. Yesterday stopped out. Today stopped out. Just a massive wicked move there. Gap continuation 2022. SR counter trend had some nice shorts here, some small shorts at the open. Tick pullback. Looked like the market would rally. You know, you're stopped out on your shorts and you think, okay, well, let's take these long trades then. So the market tries to get long here and here and here and here, and then it rolls over. October 2022 NQ got short in the night. Nice trade in the night. You can see here how fast this rally was, and then how much it rolled over. It did a little bit more than a Fibonacci retracement, like it go higher. Then it rolled over again, and you know, in the S&P, you're talking 13,125 all the way up here to 13,660, 150 point range in the S&P. That's just pretty extreme. So yeah, lots of reversals in the market. The CVIX was high. Let's take a look at that. So you see the actually the zigzag count at 58, an extreme level here at 58. Let's look at the recent days here. 58, 75 is one of the recent high days on January the 24th. You see this day right here was February the 24th. It was 53. And so we haven't seen a 58 in a while. You see, this was January the 24th. It was 74. So 74 based on this calculation. And we're at 58 today. So one of the highest CVIX readings in a while. If you take a look at the market here, it had about a $2,200 rally. Took out these lows, a $3,000 rally. Took out the lows, $3,000 rally. Took out the lows, $4,000 rally. Barely took out the lows, $11,000 rally. And then it rolled over, bounced, rolled over again. And so those are the trades on the day. Those are the market dynamics. And we are trading the micro stock index portfolio. If this worst case drawdown does not hold, we'll pause trading once again. This market is you know, challenging. We're trading it on a small scale with micros because volatility is big. It's not really, you know, the micros are actually a legitimate futures contract right now because the volatility is so big. And so we've talked about how earlier today it takes about 40K per micro. We used to trade E-mini portfolios with 50K, and now it's taking 40K to trade the micros because the margins are higher and volatility is bigger. So those are the trades on the day for Tuesday, March the 8th, 2022. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.